All right, hello everybody. Hope you had a nice weekend. Let's get ready for this week ahead. And I just want to say that one of the reasons why you're probably listening to me right now is because you know that I have a pretty extensive background in institutional trading. I mean, I did spend over 2 decades there. It makes me feel old, so I kind of don't like to talk about it because I still feel young. But anyway, in the institutional trading world, you basically have three roles. You have the portfolio managers. Those are the people that decide what's going to be in a portfolio. We're going to buy Apple. We're going to buy this stock. We're going to buy that stock. You have the analysts. Analysts support the portfolio manager. The portfolio manager might say to the analyst, okay, what should we own? Microsoft or Apple? What should we own? This or that? Give me some help. Give me some support. Go through these spreadsheets, go through these models. So that's the second role. The third role is traders. And the traders, at least in this part of the industry, which I was in, the traders are the people that decide how to buy and sell. What's the best decision? In other words, if the portfolio manager says, I want to buy XYZ, and the analysts have some compelling research or supporting stuff that say that's a good idea, the portfolio manager is going to say to me, hey, how should we buy XYZ? And I might say, let's buy it today. Let's be really aggressive. Let's wait. There's a lot of sellers around. Let's be aggressive because there's other buyers around. The traders are the people that have the view into the market. If they're doing their job right, they have their finger on the pulse. They know what's going on. The old expression is they know where the bodies are buried. All right. So as the trader, I would conduct these morning research meetings every morning, and this is not an uncommon thing. And what do we do in the morning research meeting? Well, that's what we're going to do right now. We take a look at the news. We take a look at whatever sectors might be in play, whatever commodities might be in play, whatever. Every day the market is different. Okay, so let me just jump into it right here. The first thing I'm going to look at is the S&P 500 because that's the most important thing in the institutional world. That's most firms compare their performance to the S&P 500. Oh, look at this Tilray. You know, I'm going to write Tilray down. We got to go through this. This stock should be going even lower. You know what? I'm going to do a lesson on Tilray. All right, I'm going to write that down. So make sure you check back. Hopefully I can get that done tonight. Overbought at resistance, probably going to go lower. So going back to my original point, sorry for getting distracted there. There's always a lot going on in the market. We're going to look at the S&P 500. And, you know, on Friday, it was a decent move higher. But if you compare Friday's move to Thursday's move, look at this negative action on Thursday. We opened there, we closed there. A red candle is one where the close is lower than the open. So the open was here, the close was there. Came back a little bit on Friday, but considering Thursday's move, that's really nothing. The blue team is in charge. When we were looking at it, reversal patterns, what we want to do is see, is there a change in leadership? When the bulls are in charge, the market is going higher. When the bears are in charge, the market is going lower. Reversal patterns manifest themselves on charts when we have the dynamics that are illustrating that this change of leadership is changing, or this um, who's ever in charge is changing. Sometimes you get a slow change that takes place over a while. That shows up on the chart as maybe a rounded top or a rounded bottom. Sometimes you get a trend change that happens over maybe a few days or a week. That shows up here as maybe what we call like a V pattern. And it's pretty obvious. You don't need to be a chart guru to see why we call this a V pattern. Well, you know, looks like a V on the chart. Chart patterns are not anything mysterious or like tea leaves or like astrology. And it really kind of bothers me because so many technical analysts really just, to be perfectly frank, just don't know what the heck they're doing. They give this discipline or this profession a bad name. But anyway, so sometimes we get the trend changes over a few days, right? Okay, bulls are in charge, bears take over. Bears are in charge, bulls take over. These each took maybe a week to manifest themselves. Here we might have a trend change that happens in a day. Maybe just on Thursday, the bears were strong enough but they just overpowered the bulls. Because if you looked at the market on Thursday morning, you would have said, wow, it's going to be another up day. It's going to be another blue day. We're going to open higher. But by the end of the day, what happened? The bears made this massive move and they pushed the ball, so to speak. Pretend it's football. The blue team goes up here, the red team makes a goal line stand. They push it all the way back. So we had a little bit of a rebound on Friday, but what I'm looking at is, here's Thursday's open. We're not even close to that. When short-term trading is very important to look at the previous or the couple prior days opens and closes. That's where most of the volume trades, and that's the most important levels. So I don't want to get completely stuck up on this because we got to go through different sectors. And if this was the Monday morning or the morning research meeting, some of these analysts would be like, oh, I got to go have my coffee. I got to go have my organic tea. And I'd be like, dude, you want to make some money or not? You better sit here and watch your sector. Oh, are you a technology analyst? Let's take a look at the tech sector. What we're doing is looking at ETFs that track these various sectors. Now, this is a really illustrative chart. I mean, I could talk about this chart for hours, but I won't. But one of the things that we talk about at Stock Market Jobber, and one of the things that good traders who are savvy understand, is that some price levels in the market are more important than others. That's just how it is. It's a fact. You got to accept it if you want to be a trader. And here's the thing: a lot of people that are traders or investors like yourself, or people that are learning. Excuse me, I'm having myself a little nice cocktail here. People like yourself, if you're listening to me, you're probably someone who's intellectual, someone who thinks. You're probably not watching the Kardashians right now. You're probably thinking, how can I make money? And let me just tell you all something, okay? Trading is not a chess game. In chess, the rules are always the same. Some people come in here and they think, oh, I got to come up with this mathematical formula and I could figure out. That's not how it is. When we look at a chart, we're looking at an illustration of human psychology, and humans are not rational. All right. In chess, the rules are always the same. The rook always moves the same. The knight always moves the same way. Trading is more like a poker game. There are rules, there are strategies, but the person on the other side of the table from you is a human, I hope, unless there's some kind of bot. But they have emotions, just like you have emotions. And emotions and psychology are a big thing about what's going on in the market. So this is a really good chart to show this. Now take all the stuff you've thought about, price to earnings ratios. If you're a trader, I mean, it's kind of okay to pay attention to that stuff, but not a big deal. Don't listen to what they're saying on CNBC or Fox Business News or Bloomberg or whatever chat you're in. Look at this chart. This is the technology sector. This is an ETF that tracks it. This is a sector that's worth trillions and trillions and trillions of dollars. Somehow, way back here in December, we found resistance around the 177 level. Okay, buyers are bringing it up. There's not enough supply to fill all the demand, meaning there's not enough sell orders to fill all the buy orders. So the buyers have to pay a premium that forces an uptrend. We get to resistance, and for whatever reason, that's where the sellers come out of the woodwork. All of a sudden, there is enough supply to fill all of the demand. So the market stops moving higher. Okay. Now, fast forward 18 months later, 18 months. Okay. A lot's gone on in the last 18 months. I know for you, for me. I mean, gosh, for me, it's been insane. The girls are going off to college. They've been out of control. But anyway, that's a different. I should have cited a website for that called like parentbitch.com. Actually, I'm going to write that down too. That could be another good business site at parentbitch.com. All right. Now, why did XLK run into resistance around 177? Is it a coincidence? Is it because that Jupiter lined up in the same place as Mars or Venus or blah? No, it's psychology. There are investors who bought back here who are upset when they go underwater and they tell themselves, if this ever gets back to the level I bought it at, I'm going to sell so I can get out of break even. So buyer's remorse made this peak become resistance again. It's not a coincidence. It's not because of what Joe Kieran is talking about or Steve Leisman. They should really retire. Or Kramer. Resistance. So resistance can become resistance again because of buyer's remorse. People bought here, market goes lower, they want to get out at break even. When it gets back to their level, they go to sell. If you have enough remorseful buyers placing sell orders, guess what? Resistance forms. Now check this out. Why does resistance become support? Notice how the resistance level has become support. This is because of seller's remorse. There are people who sold who thought they made a great decision when it went lower, but then it goes higher, and a lot of them regret doing so. And they're like, why did I sell, man? I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I get them for the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it can convert into support. And if you think I'm crazy, I mean, maybe I am. It all depends on how you define crazy. But one thing I know is charts and trading. Okay. I might not be good at other stuff in my life. I still suck at golf. I can't get my kids to actually listen to me. I mean, I can't even get them to shut the damn light off. I've even showed them the electric bill. It's like, okay, well, hey, if you shut your light off, we'll have an extra 20 or 30 bucks to spend on whatever. Anyway, if you're a parent, you're listening to me right now, you know what I'm talking about. But we just talked about why would resistance become support? Seller's remorse. People sell, goes higher. They tell themselves, I made a mistake. I want to buy my shares back. I can buy them back at the same price I bought them at. If there's enough of these remorseful sellers placing buy orders, resistance becomes support. You think I'm lying or I'm crazy? Well, the charts don't lie and the charts aren't crazy. For some reason, certain price levels are more important than others. Resistance here became support here. 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 Resistance here has now become support. When this dynamic of seller's remorse converting resistance into support ends, it's a characteristic of a market top. If a market tops, they go lower afterwards. So make sure you check back. I just want you all to understand how important it is to know where these important price levels are. In the institutional world, this is what we look at. If this support doesn't hold up over the next few days and XLK starts to go lower, market's going lower, there's going to be a lot of ideas on the short side. In other words, we can buy inverse ETFs. We can look at puts to buy. All right, everybody. Thank you so much. Make sure you check back, and I will talk to you soon.